when I heard about Buffett for the first time in '94, he had been compounding for about 44 years at the time, from about 1950 to '94. And when I looked at the track record, it dawned on me that he was moving basically to the next square in less than 3 years. He had averaged for the first 44 years about 31% a year. So if you compound at 26% a year, then your money doubled every 3 years. And of course, if you're doing 31%, then you're going even faster. Okay, so this notion about compounding, and you saw that slide with Einstein saying compounding is the eighth wonder of the world. There was this guy who invented the game of chess, and the king was so excited about the game and became an addicted player that he told the inventor, you can ask for anything you want and it'll be yours. And the inventor of the game of chess says that, I just want you to put 1 grain of rice on the first square of the chessboard, and then put 2 grains of rice on the second square, and then keep doubling the grains of rice until you get to the 64th square, and that's all I want. And that emperor clearly was not smart enough to be employed by Google, and he was mathematically challenged, so he basically got upset with this inventor. I wanted to give you all these things, and this is all you want, a bunch of rice. So the guy says, yeah, that's all I want. So he tells his treasurer, measure out the rice for him and get him out of my court. And after a week, when the treasurer was still not done, he asked him what the problem was. He said, well, it took me a while to run the calculation, but we don't have the rice. In fact, he said that there's not enough rice in the kingdom or even on the planet to fulfill the request. And the amount of rice, it becomes, 2 to the 64 minus 1, which is a long Google-ish kind of number. In today's dollars, it's about 300 trillion. And I think that is just about global GDP. Actually, not global GDP, but global wealth. So if you took the wealth of every man, woman, and child on the planet, that would have brought equal to the 2 to the 64 minus 1 grains of rice. And so that's the power of compounding, right? It grows dramatically. And when I heard about Buffett for the first time in '94, he had been compounding for about 44 years at the time, from about 1950 to '94. And when I looked at the track record, it dawned on me that he was moving basically to the next square in less than 3 years. He had averaged for the first 44 years about 31% a year. So if you compound at 26% a year, then your money doubles every 3 years. And of course, if you're doing 31%, then you're going even faster. And so basically, that is at the essence of the genius of Buffett and Munger, is they absolutely understand the power of compounding, and they basically have gone at it with this very long runway and such. And of course, if you look at it from 1950 to 2014, it is no wonder that Buffett ends up as the richest guy on the planet, because if you keep compounding, that's what ends up happening. And so that's the one of the important takeaways I took from the learnings from Buffett and Munger, is that you don't really need to do extraordinary things to get extraordinary results. If you can double your money every 3 years, then a few doubles starts adding some significant numbers. I mean, if you start at $1 million in 30 years, it becomes $1 billion. If you start with 10,000, it becomes 10 million. It's just incredible in terms of what happens. And the doubling every 3 years, my way of thinking of that was that if you buy a stock at less than half of what it's worth, and you just sit on it, and in 2 or 3 years it gets to being what it's worth, lo and behold, you'll have your 20-30% annualized, and sometimes you might get it in a year, and sometimes you might have mistakes, and the blended result of all of that ends up being where it is. And so I think compounding is a very powerful notion, very much in sync with the whole Dhando framework. And one other thing I wanted to mention is that, just in the same kind of mindset of Google, is that the market gets confused between risk and uncertainty, and it kind of confuses one for the other. And risk and uncertainty are two very different things. And in general, anytime you get to a situation where risk is low, but uncertainty is high, in general, the odds are high that the stock in question or business in question will be mispriced, and it'll probably be underpriced. So that combination of low risk and high uncertainty is a great combo. And the low risk means that your downside is limited. And a good way to think about that is, like, for example, when Bill Gates started Microsoft, people always think about these companies being formed as being highly risky ventures. But if you really analyze it, so when Gates started Microsoft, he did not have a net worth or assets or capital. So the fact that he was taking a high risk, well, there's no capital to lose. So you can't really have risk because of a loss of capital. And if you think about the opportunity cost, so he had not yet finished his undergraduate degree. At that time, with the couple of years that he had spent at Harvard, his value in the job market was very low. So if he went out looking for jobs and such, people would not be willing to pay him that much. And if the venture did not work, so he moves to New Mexico, starts Microsoft. And so if you think about the notion that Microsoft doesn't work, well, he goes back to Harvard, finishes an undergraduate degree, and now when he graduates, he's got interesting stuff on his resume, that what he did in New Mexico for a year. So any way you look at it, the startup of Microsoft was almost risk-free. But the uncertainty related to Microsoft was very high. It could have been that the company failed and whatever little money he had was gone. Or it could be that he could have become the wealthiest human on the planet, which he did. And so it's a very wide range of outcomes that could have happened at that point. But the key thing was that the risk was low. And in fact, if you study non-venture-backed startups like the Patels do not take risk. In fact, we repeatedly study businesses. There's more than 1 million businesses that get started in the United States every year. Less than 1,000 of them are venture-backed, maybe a couple of thousand. So 99+% of businesses that get formed in the United States are not venture-backed businesses. And most of them follow this low-risk, high uncertainty principle when they get going, like the Patels. And so it's important to keep in mind that I think you can replace capital with creative thinking, the way Richard Branson did. And certainly for most businesses, you don't even need the capital. And certainly in a knowledge economy type business, capital actually becomes useless, if you will.